Chairman and Managing Director with Deepak Fertilizer and Petrochemical joins us now. Sailesh, good morning. Thank you for joining us. The headline, it's a headline-grabbing deal. 8,000 crore of nitric acid supply to Aarti Industries for 20 years. Break the news for us in two parts. What is your current relationship with Aarti Industries? Because you already have an existing relationship. How much of that business is going to be fresh business? Because if I look at the 8,000 crore deal and simply multiply it by 20, then it gives me a comfort of the size of the business. But how much of this is additional to the deal which you already have?
Sure. So let me break the news to you as you suggested in two fashions. One is looking at it from a macro, meaning outside in perspective, and then the inside out where I'll address your questions. So number one is that from an overall perspective, if we see this kind of a deal validates the China plus one, the China shift that we have been hearing about. And this is a classic, I would say, solid example of it actually happening because it is, somewhere we are seeing that the need for specialty chemicals is something that is getting validated by this backward, connect the strategic alliance that we have with Aarti. Number two is at the macro level, the classic dilemma that everyone has, make or buy. And this is a classic example where if the two groups come together and look at a win-win kind of a relationship, it could be something where one could take on the world, as they say, with this kind of a backward connect and alliance. And the third aspect that I might share from outside in a macro perspective is that it also very clearly brings out that nitric acid is a super critical intermediary building block chemical, which is required for fertilizers, for mining chemicals, and now even for industrial chemicals, specialty chemicals. So that is from a larger perspective. Coming to at the micro level, yes, we have had a relationship with Aarti over the last many years, and the relationship has been always a contractual relationship of ranging for 3 to 4 years. Now we have moved to a 20-year kind of a relationship, and that is something which speaks volumes of the faith, trust, confidence that we have built in us, we and them, and for them to look at the growth in the specialty chemical business as we see it. So it is something where the volumes are, going to also perk up as we go through, and a 20-year period would allow, that kind of a volume growth. So that is broadly what we are seeing as breaking news, as they say.
So 8,000 crore in 20 years, will it be equally split? And again, I would like to go back to the part B of my first question, which is that what is your existing relationship with Aarti, and this deal for next 3 years, because of this deal, what additional kicks in? From a market standpoint, you'll appreciate a viewer query. They tend to focus on next couple of years and quarters. 20 years from a market standpoint, at least for the viewers whom we are addressing right now, could be a long haul.
Correct. So we have roughly around 70 to 80,000 odd volume kind of a relationship, and it's going to grow up to 120 and even more. So year one we are looking at is the first 3 years itself is going to see a substantial jump, and then further up one could look at further jumps emerging out of growth.
Hi there, good morning. Now, do you foresee any sort of risk, or is there going to be any supply commitment to any existing customers with this deal?
So basically, as you would know that Deepak Fertilizers have today almost 60% market share. We have 7 weak nitric acid plants and 3 concentrated nitric acid plants. So roughly around a capacity of 9 lakh tons for the weak nitric acid plants, around 2.5 lakh tons per annum for the concentrated nitric acid plants. And we are probably Southeast Asia's largest. So in terms of the supply risk, it is very well, contained. It is very well covered because of multiple sites and, multiple plants that are there. And this is something which we are looking at in terms of, providing that risk mitigation, not only to Aarti, but to the whole industry. And as we see growth in the downstream market, we are also seeing, I would say very interesting opportunities for further brownfield capacity enhancement. So we will make sure that, customers really, get all the asset that they need and we can grow along with them. What is also happening is that the other risk that could come in is a raw material risk for us, which is ammonia. And as you are aware, our large world scale ammonia plant is coming up now by May 23. That is, 5, 6 months away. And that is going to give further risk mitigation for the whole value chain. So we don't, really feel concern on that front.
You did allude to the fact that volumes are really going to perk up. You're looking at 120,000. Just give us a sense as to how prices are going to be determined.
So very broadly, what we have worked out, because for a 20-year kind of relationship, it needs to take in all the ups and downs, as they say. So we have worked out somewhere in the formula a reflection of the costs, a reflection of the efficiencies, a reflection of the volumes, and so on and so forth. So we have come up with a win-win formula, which can make good sense to us and to Aarti. So that's something which is going to be a bedrock of a long-term thing. And of course, there are elements of take or pay, supply or pay. So there are assurances. So on one side, we are taking care of the volatility by bringing in a formula-based relationship. On the other side, we are bringing in stability by way of take or pay or supply or pay.
All right, fair enough. Let's go forward then and talk about whether or not you will be incurring any capex and expanding your capacity in order to meet the commitment for under this contract.
So currently, as I had mentioned, we are having good capacity with the weak nitric acid and concentrated nitric acid. But looking at the growth, certainly we smell very interesting opportunities for further brownfield capacity enhancements. So we will be considering that as we see the market growth emerging, not just Aarti, but even others.
Would you be making similar margins from Aarti in this long-term agreement compared to the existing agreement? And if you can just share with us what kind of margins you'll be making with this deal?
So margins would be speculative to, in one sense, elaborate. But let me share with you that, see, what happens is in any long-term contract, it has to be win-win. And that emerges only if there is a good margin to us, a good margin to our customers. And we have struck a deal which makes good business sense over a long period. So I think that would, tell you all in terms of, the reasonable and healthy margins that we are looking at.
Okay, so that's Deepak Fertilizers top management for you on that big contract with Aarti Industries. Now, all of you know the fine print as well. Thank you so much for being so candid on how exactly this arrangement is going to work, how it's going to impact capacity, and of course, whether there will be a pass-through and prices are, of course, volatile. Deepak Fertilizer, yesterday you saw very high volumes backed by, good price action as well.